Hey, what's going on, everybody? Today we're talking Ant Group Ipo. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. I'm going to drop us into a few different news clippings and articles surrounding this IPO, which is being deemed the greatest and biggest of all time, if not definitely the biggest IPO of this year. However, it's not going to be listed here in the United States. So I will also drop us into a few different articles and strategies of how analysts and investors are taking and making to get in on this IPO. So I also would like to thank y'all for subscribing. We surpassed the 100 subscriber mark. I really do appreciate it, y'all. Please continue to like, share, and subscribe. It really helps out the channel. It's Monday, Labor Day here in the USA. Please enjoy.
This app handled more than $15 trillion of transactions last year. That's more than MasterCard and an amount of money that's similar to the European Union's GDP. It also has more than 900 million users in China. People use Alipay on buses and taxis, to pay their utility bills, shop in stores and online, and even to buy insurance and make investments. And yet many Americans may have never heard of it.
And it's huge in China. The Alipay app is essentially a financial supermarket that allows you to do everything on your mobile phone.
Alipay's parent company, Anc Group, is getting global attention in 2020. Its combined IPOs in Hong Kong and Shanghai could be one of the largest listings ever, as Ant is aiming for a market valuation in excess of $200 billion. That means it may sell more than $20 billion in shares when it goes public. So what is Ant and how did it become so big? It all started with Jack Ma, the flamboyant Chinese businessman who's known for his inspirational speeches.
It's not about the money, it's about the dreams.
Extravagant performances at company parties. And of course, co-founding Alibaba more than 2 decades ago, which has since become a $500 billion online shopping giant.
Alibaba is like a mix of Amazon, eBay, and PayPal, also with a dash of Google. But it handles more business on its shopping sites than any other company in the world.
When Alibaba was just starting out, it created Alipay as an escrow service to hold money from buyers and release the funds to sellers after the goods had been sent and received. This built trust between merchants and buyers and helped to pave the way for the e-commerce industry boom in China. Not that many people in China have credit cards compared to the US. With Alipay, most people draw funds directly from their bank accounts and make cashless electronic payments without needing to use credit cards.
In China, you barely see anyone use cash anymore, whether it's to buy a soda or a pack of cigarettes. People buy things with QR codes and facial recognition.
In less than 5 years, Alipay has expanded to become a ubiquitous app that touches other parts of life. Today, Anc Group encompasses not just Alipay, but a broader range of financial services including microlending, insurance, and one of the largest money market funds in the world called Yuebao.
So it's a really flexible tool that gives the average Chinese consumers and small business owners who have long been ignored by the major banks a taste of what it's like to be able to invest and save money and to get financing to fund operations. And all of these are done just through their smartphones almost instantly.
But the rapid growth of Ant has drawn scrutiny from banks and regulators as previously reported by the journal. Some Chinese banks were earlier concerned that Ant could take away their deposits and reduce how much cash people use. Ant is trying to shed its image as a disruptor of China's banking sector. This year, the company dropped the word financial services from its name in order to rebrand itself as more of a tech company. It also partners with many banks that fund the loans it makes and has made its money market fund less risky.
Regulators, especially the central bank, they are very concerned about potential liquidity risk in one single fund on the Yuebao platform. The problem is if all investors in this fund decide to draw the money at the same time, it could cause a huge liquidity risk and even damage the stability of China's financial system.
Ant responded quickly to regulators' concerns by imposing caps on how much people could invest and opening the platform to rival funds.
While Ant may have been a bit reluctant to do that to some degree, its cooperation with the government really is crucial because in China, very few businesses can succeed without blessings from the regulators.
Outside China, Ant's attempts to expand have sometimes gotten entangled in politics. In 2017, Ant tried to buy U.S. money transfer company MoneyGram, but the deal was scuttled by U.S. officials because of national security concerns.
That was a really big blow to Ant's ambition to expand in the U.S., which is a very large and potentially lucrative market.
And this time, Ant's dual IPO with Alibaba will bypass New York. A person familiar with the company said Ant never intended to go public in the US. It has its eyes on India and Southeast Asia, where consumers and businesses are underbanked similar to those in China. But Ant's plans aren't to launch Alipay in those markets.
Ant never intends to serve consumers outside of China via Alipay directly. Their approach is to provide some tech or operational expertise in some mobile payment startups in those markets, but they don't really run this business in-house.
And since Ant has already captured the biggest market in the world, it's been laying the groundwork to follow the millions of Chinese tourists who go abroad every year. The company has increased partnerships with retailers and restaurants overseas. While the pandemic has stifled much of global travel this year, the company is not seeing a slowdown of online shopping and cashless payments in China. Though Ant will make global headlines when it hits in Hong Kong and Shanghai, it may remain a household name only in China.
All right, so perhaps this guy Jack Ma is the reason why this IPO is getting such great reviews, and perhaps why this IPO is going to be the biggest of all time. Since it's being valued quite high, then it just suggests that it's going to continue to grow over time. The more people that use it, the more people that are investing into it. So usually things like that tend to just skyrocket. I kind of compare it to, and I'm not trying to directly compare it, but it's almost like Elon Musk and Tesla. A lot of people just like Elon Musk, and they'll just invest in Tesla. So there's a lot of Tesla fanboys and girls that just like his style, they like the way he speaks, or whatever. They like investing in the CEO of a company rather than just know what the company is doing, or they look at the balance sheets, the fundamentals, the technicals about it. So again, either way, it seems like it's already gaining traction. So I'm going to put us into another article here highlighting how we can invest into it. Let's take a look at this article from Investor Place, how you can invest in the Ant Group Ipo. I'm not going to go through the entire article. I'm just going to skip ahead and look directly at how to invest in the Ant Group Ipo. As a U.S. retail investor, you cannot directly invest in the Anc Group Ipo because the company won't list in the U.S., but you can indirectly invest in the Anc Group Ipo. Such indirect methods include buying the Renaissance International IPO ETF, ticker symbol IPOS, an ETF which invests in international IPOs. More than half of this ETF's holdings are in China. It is quite likely that the IPOS ETF then will gain exposure to the Ant Group Ipo. This is your best bet if you're looking for the most direct exposure to the Ant Group Ipo. Buying an ETF which tracks the Hong Kong and Shanghai stock market indices, that includes the iShares MSCI Hong Kong ETF, ticker symbol EWH, and the iShares MSCI China ETF, ticker symbol MCHI. Or buying the Invesco China Technology ETF, ticker symbol CQQQ, on the idea that the Ant Group IPO will provide a tailwind for the broader Chinese tech space and create a rising tide which will lift all boats in the sector. Okay, so initially, why would the U.S. want Ant Group, right? We already have huge banks, large banks. In fact, a lot of the major U.S. banks are kind of handling this IPO in some form, way, or fashion, if they're overlooking it or if they're overseeing it. And we already have fintech, right? We have Square, which owns Cash App. We have PayPal, Venmo, Zelle. There's a lot, and there's plenty more that are uprising. So I'm not really quite sure exactly what it is about this Ant Group, besides the fact that it's being valued as the biggest fintech company in the world. It's apparently the biggest, and it's going to only grow, and the numbers are indicating that it's the best unicorn out there. So let's take a closer look at some of these ETFs and kind of wrap our head around what it is about these ETFs that are probably the best way to play the Ant Group IPO.
IPO market, because it's doing great, and we had a huge potential IPO announcement today. Jack Ma's Ant Financial, which is the #1 fintech company in the world right now. Let's face it, it's a subsidiary essentially of Alibaba. They're kicking off their IPO, but not in New York and not in London. They're going to do it in Hong Kong, and they're going to do it in Shanghai and on the tech exchange in Shanghai over there. Guys, either one of you take a crack at this, but I think there are two important stories here. First, it's not New York or London, and I think that's the result of some real geopolitical tensions that exist. And secondly, it's huge. I mean, they're talking about north of $20 billion here. If that is the case, this could be the second or third biggest IPO of all time here. I mean, #1, of course, remains Saudi Aramco at $25 billion. Alibaba's at 21. But if Ant Group goes over to 22, it could be the second or third biggest in the world. You get the idea here. U.S. Visa's way down there at $17 billion. So I guess, Todd, your thoughts on that, and how do you play this? I mean, how would investors get into international IPOs in an ETF space?
So the IPO ETF space is relatively limited. IPO, the ticker IPO, is one way of doing it for U.S. exposure. The firm Renaissance also offers an ETF, IPOS, that is the international companies that have gone public within the recent period of time. About half of its assets is focused on China, so it's logical that this is the ETF that's first to get exposure to it. But then again, this is likely to be added into those broad emerging market ETFs or China-specific ETFs. And you can get IEMG and VWO, the two heavyweights within the emerging market space, to get exposure to it at some point. And you'd likely assume it'll be in China ETFs like MCHI and GXC once it makes it past the criteria. But it's very interesting to see that this is not going to be a U.S.-listed company.
Yeah, well, that's what I find most interesting.
Yeah, there will be a delay,
Go ahead, Chris.
Todd. It won't happen right away. I think if anyone has the ability to do it quickly, it's to your point, Renaissance. But the broader indices, look, just like any other big company, that meets the criteria for index inclusion, we expect something of this size and this magnitude would be up for consideration, probably, in the fastest order of time possible to be included in indices. And then all of those passive indexes that Todd alluded to, all those that ETFs that track those indices will be having to add that name if it's allowed. Right. Again, there's been a lot of chatter about what might or might not be allowed going into the second half of this year.
Right. So that's my point. The whole IPO thing with China has gotten dragged into all of these geopolitical issues around the trade wars, around coronavirus, and I don't think it's a coincidence that they're not listing in New York or London at all. I think there is obvious political pressure on some of these companies over there to list over here. They may not feel welcome here. There are still companies coming from China, but they're certainly not on the level of Ant Financial. I wonder, guys, is the U.S. missing out on something at this point? Have we deliberately drove people away, or is this, sort of the way the cookie crumbles when you're dealing with the fallout from geopolitical tensions?
Well, I think that you'll see there'll be an opportunity for U.S. investors to find ways and to find vehicles overseas to get access if they absolutely need to get access to a security like this. But to your point, look, the geopolitical tensions are definitely going to be an issue, going forward, and it's something to keep a very close eye on.
Last word to you there, Todd.
I'm sorry, just to jump in quickly. This is the benefit of what ETFs offer for U.S. listed investors to get exposure to harder to access international markets, particularly like China. So even though it won't list here for an individual stock perspective, U.S. ETF investors are the winner again and again and again.
Gonna just highlight a side-by-side comparison of Alibaba and IPOS, which seems to be the ETF of choice for gaining direct exposure to the Ant Group IPO. When I'm looking at the year-to-date chart, I'm noticing that the price action is very similar. There's a little bit of crossover with performance, and what I mean by that is that at times Alibaba's performance is doing better, and then other times the IPOS ETF performs better relative to price again. So if we look at the price, right, one of them is to over $200, so Alibaba is more expensive. However, you have a little bit more direct, in my opinion, direct access to this IPO compared to a more affordable ETF. I'm going to put us into another news clipping here highlighting a little bit more about the Ant Group and Alibaba.
Ant Financial's IPO has been highly anticipated by investors. It was last valued at $150 billion. It owns Alipay, one of China's most popular payment apps, and it's affiliated with Alibaba, the company that raised billions of dollars and set a record when it debuted in New York in 2014. Ant choosing to list in Hong Kong, it's a huge boost of confidence for the city. Hong Kong's status as Asia's financial hub is now in doubt after Beijing imposed a controversial national security law here earlier this month. Chinese firms are also facing more scrutiny in the United States as tensions between US and China are at an all-time high. Now, Ant signaling its support for Hong Kong and Shanghai today. Chairman Eric Jing saying in a statement, "The innovative measures implemented by Shanghai Star Market and the Hong Kong Stock Exchange have opened the doors for global investors to access leading-edge technology companies. We're thrilled to have the opportunity to play a part in this development." Ant's IPO will follow several other high-profile listings in Shanghai and here in Hong Kong. SMIC, China's biggest chip maker, e-commerce giants JD.com and Alibaba have all raised billions of dollars in Shanghai or Hong Kong in recent months. Ant didn't say when the dual IPO would take place, a spokesperson declining to comment on the timing. Sharice Pham, CNN, Hong Kong.
Let's take a quick look at this article from the CNBC website. I'll leave it linked in the description below. Goldman Sachs joined syndicate for Ant IPO of up to $30 billion. And I just wanted to highlight how a spokesperson for Goldman Sachs, which also acted as a joint lead manager of Alibaba's $12.9 billion secondary listing in Hong Kong last year, declined to comment. Okay, so the IPO of Ant, already the world's most valuable unicorn or billion-dollar unlisted tech firm, would be the first simultaneous listing in Hong Kong and Shanghai's year-old star market. The Hong Kong leg of the IPO is being sponsored by China International Capital Corp, Citigroup, JP Morgan, and Morgan Stanley. Credit Suisse is working as a joint global coordinator. Okay, so these investment banks are helping out, put it together. Let me just go ahead and see a little bit more as to when. Oh, here we go. So Ant's mega IPO size means a large syndicate of investment banks, especially those with strong retail investor networks, is expected to work on the deal as it progresses towards a possible launch in October. So October is the month that we can possibly hear more about it, but just keep your ear to the ground as more news unravels, if anyone's willing to talk about much else. So that's it. I'm going to leave it here. Thank you for your time. I really do appreciate it. Thank you for the likes, the shares, the subscriptions. I really do appreciate it, y'all. It's helping me out tremendously. Please continue to do so. Again, like I mentioned earlier, we surpassed the 100 mark, and I know that may not be a lot to those who have millions of subscribers, but honestly, when this channel got to 20 subscribers, I was super stoked. So I'm very excited to keep making more videos, and I really do hope y'all are doing well, staying safe. Let me know if there's another company you'd like me to research. Y'all have a good week.